average American household over the last year paid an additional $1,700 thanks to tariffs.
You may have heard a lot of chatter in the media recently about tariffs, Bitcoin, cryptocurrency, or precious metals like gold and silver, and its impact in the market. But maybe you've also been confused by what's really going on and what that all means. So today we're going to break it down for you and talk about why it's important to keep your eye on your long-term goals, even in the midst of all this information. So welcome, hello, and we're here with Money on Your Mind from Edelman Financial Engines. I'm Michael Liersch, a behavioral scientist, financial planner, and your chief planning officer at EFE. Thanks for joining us for a conversation about how people are feeling about money, what they're wrestling with, and how financial planning can help you straighten things out. And today we're doing something a little bit different than in past episodes. I'm really excited about it. We have Katie Klingensmith here. She's our Chief Investment Strategist. We're going to get to some of the moment topics, just like I highlighted up front, around everything related to what's going on in the markets today, in crypto, in precious metals, in tariffs. So Katie, welcome to the podcast. I want everyone here to know you are such an important part of everything that our clients think about, everything that we do with our portfolios. So we're happy to have you here to tell us what all of this means and how it affects everyone's investments. So tell us a little bit about your role and yourself, Katie.
Michael, it's so fun to be here. I joined Edelman Financial Engines about a year ago. And initially in my career, I started out thinking about economic policy, loved the big topics. I worked at the Federal Reserve and the U.S. Treasury, spent a lot of time internationally. It's a big personal interest of mine. And I found that I liked capital markets. So I was an analyst for many years at some of the big firms. And the part that I especially like is figuring out how the big events of the world matter to real people, and maybe a bit of the teaching of unpacking the topics, following them all, a little bit of a nerd about everything that's breaking in the markets in the world. Again, like seeing things in real life. I actually just got back from Mexico yesterday, and there's a lot going on in Mexico. And then translating those topics so that we can figure out their texture for individual people.
So you mentioned a little bit about traveling, being in Mexico. I just got back from, from Panama City. It is really great to be in these roles and travel the world, especially considering all that's going on. Any reflections on, what you're seeing in terms of the sentiment of the U.S. in your recent travels, that would inform some of the things we're going to talk about today?
Absolutely. I think there's a lot of concern around how tariffs and other policies are pushing the United States away from the rest of the world. And I think these are meaningful reflections. But I feel that when I travel, and I was in Argentina earlier this year, but in Europe a couple times in the past year, we're still so much part of the world. The dollar's what everybody uses. Everybody's following what's happening in the US. A lot of the political conversations we have here are happening in other countries as well. So I think more than anything, that perspective that we're still very much part of the world in the financial sense, but also in the broader human sense. And so many of the topics are actually pretty universal. To me, there's a lot of complicated stuff there, but there's also a shared experience that matters even in the way we think about investing.
That's great perspective, Katie, because this will help us get right into the episode. Because what is at the top of everyone's minds right now are tariffs. Can you break down what's happened, why you think the markets are reacting in a, let's call it volatile way, kind of going down and then up again and then down again. What do you think's happening here?
So last week we heard that the Supreme Court will not allow the White House to use the current authority that they have to impose tariffs without going through Congress. Now, initially markets were like, what does this mean? And actually markets liked it because they thought it might be good for companies. But then immediately we heard from the White House, as we would have expected, that they have another way to impose tariffs. Here's my bottom line. Tariffs are hard on a bunch of companies and U.S. households, but we're going to have them. They're going to be here. Following the exact news of the authority that the White House uses, that's not going to be what matters. We're going to have tariffs in one form or another going forward. There are going to be winners and losers. Markets are sorting through that.
So, Katie, at the end of the day, everyone is talking about tariffs, this, tariffs, that. I think people just want to know, what is a tariff? Let's just really hit on that. Let's hit it.
What's a tariff? It's a tax. It's simply a tax on an item that's being imported. So whatever it is that a U.S. person or company brings into the United States, just like a sales tax, it's amount of money that goes on top of it, and then that money gets paid to the U.S. government. That's it. There's this question.
So who takes on, I think everyone wonders, and you and I get questions about this all day long from every constituent that we work with internally and externally to EFE, who ends up footing that bill, that tax bill?
That is the golden question. So we have a fair amount of evidence over the past year, and it's not super surprising. It seems like the foreign exporters are not charging less, even though the importer in the United States has to pay more. So Americans, one way or the other, are paying almost all of that. So we have that in the data.
I see. So we see that in terms of inflation or having less purchasing power, being able to save and invest less. So it's real. We all feel a little constrained.
Listen, I mean, there are now a number of studies, and I like the one that's from the Senate Joint Economic Committee because it's official and it's Republicans and Democrats together, that said the average American household over the last year paid an additional $1,700 thanks to tariffs.
How should our listeners think about that for their pocketbook? Well, suddenly I have more now to spend because tariffs might not be as easily applied. Are markets going to react negatively or positively on an ongoing basis? Like, what's your thought here, Katie?
Michael, tariffs are here to stay.
Okay.
We might have a different legal authority. We might ultimately have Congress come in and approve certain tariffs. Countries that negotiated individual agreements with the United States over the last year are not suddenly walking away from them because of the Supreme Court decision. If the Democrats end up back in the White House, do they want to give up that tax revenue? One way or the other, higher tariffs are here to stay. We should expect it. I might tell you that tariffs are here to stay, sure, but the level of tariffs, with which countries, which industries, it's going to be so complicated for a long time. More than anything, what I want us to remember is last March and April, when we heard about this imposition of tariffs, the reciprocal tariffs, which, okay, maybe those are not going to happen in the way that they were announced last year, but markets sold off so dramatically and then entirely came back. So it means that not that tariffs don't matter and not that they don't create winners and losers, but in the long term, if you jump away because there's a scary, uncertain day in markets, you are likely, and a lot of history shows us this, and certainly the tariff trajectory, you are likely to miss those days of recovery as well.
I like that a lot, Katie, because it does bring us back to the roots of this podcast, which is in behavioral science and behavioral finance, and the markets in a lot of ways are all about that. So super helpful. So let's go to something more specific, which is around precious metals like gold and silver, the dynamics there, coin-based, investments and/or, digital ledger type technologies. Mm-hmm. What is your perspective on why people were giving that so much energy over the last couple of weeks? And what energy would you apply to it in terms of portfolios that our listeners or investment decisions that our listeners could be thinking about?
There's just a lot to worry about. And I think among the worries is that not just the Federal Reserve, but also other central banks are maybe they're dealing with all sorts of economic problems and their government's spending too much money. And so there's this sense that the dollar and regular, investing is maybe a little bit at risk. And so I think that that's a big reason why people have said, okay, well, I'm nervous about the world. And so what do I do? What do I buy that's like got real value that's not just going to go away? And I mean, we don't generally find that very analytically solid to have those huge worries. But we certainly have a lot of sympathy for why people are concerned and have that desire for something that feels tangible.
If that's someone's perspective, Katie, what would you say to them, and how should they think about what just happened then with gold, silver, things like Bitcoin, what would you say to them? Should they abandon ship on those ideas? Should they lean into them? Is it more of a measured approach?
So we have never encouraged our clients to have allocations to either the precious metals directly. They're certainly embedded into our portfolios in lots of ways. Or we have, Bitcoin can be an interesting investment option, but we don't have it directly in our default portfolios because we don't see those assets as producing the same kind of growth and return that a company would. So, a company is constantly innovating. It is constantly investing the money that they make, and then they're making returns, which they either give back to their owners, you, me, who own stocks, or they invested into the company to make more money.
When they do that, Katie. I
know, I like it too, but gold and silver never do that. We appreciate that can be a client preference, but we certainly don't see in the math or the logic that they create value the way bonds, lending people money, or stocks, owning companies, does over the long term. So we don't, again, have them as default. I would just note though, and you mentioned what's happening the last few weeks, we saw gold and silver go way up the last few years. We saw them go way up with all these concerns, and then we saw them go way down with one little announcement about the future of the Fed. And it just struck us as, wow, this is the kind of
remind
volatility.
People what that announcement was.
The announcement was that the White House was, after a lot of speculation, they were going to nominate, or they are planning on nominating Kevin Warsh as the next chair of the Federal Reserve. And he is seen as certainly somebody who's friendly with the White House. That's why they're nominating him, but much more of an inflation fighter and an institutional pro than some of the other discussions. So the worry that the Fed might, go off the rails, and that therefore we need to have these real things that we can touch, and we don't just want companies that could be inflated away. That went away very quickly, or it was placated. It got lesser very quickly. Silver had the biggest drop it's ever seen in the history of recorded markets, and gold lost almost 30% in a day. Now, it's come up a little bit since then. It's going to go up and down, but it reminded us that its value is on what we think it should be worth, as opposed to what it creates like a company.
So that's extremely helpful, because I think it leans again into this theme of uncertainty. Can you lean into the Bitcoin and this kind of Coinbase dynamic a little bit on this theme?
Yeah, let me just speak to how it's different. So I think that last year there was this general observation that Bitcoin, gold, and silver were all moving up in response to some some opportunities, but also some broader concerns that we already talked about, Michael. And I think there's certainly in the numbers has been a total divergence between what Bitcoin has done over the last few months and what gold has done. Where we talked about that crazy day at the Fed, but generally speaking, gold has been going up, and on days when there's a lot of uncertainty about tariffs or a lot of uncertainty about Iran, gold is gaining. People are worried, they go buy it. Bitcoin has not been gaining when people are worried about other things. So it actually fell quite a bit and hasn't recovered. And again, we're just not seeing that behavior of people valuing it more when they're nervous. So I think that there are reasons why Bitcoin and other, as you say, digital assets as a industry and a technology may gain over time. And it can be a client preference to include in a portfolio or in their overall investing. But when we look at portfolios, we really want what we bring to the conversation to be about building the most robust and predictable portfolio to get people to where they want to go.
What's the one thing they should take away from all of this?
We can't tell you not to worry. There's a lot going on in the world.
And we shouldn't say that, Katie, right? That just never feels good. Don't worry.
No.
Calm down.
No.
Right? Those are terrible things to say.
And we can't tell people to not be interested either. I'm very interested in it all. What we can try to do is keep some poise and some calm around how we invest in a crazy world. We could see our investments go up and down, but we know from a long history and a lot of study that we are better off when we can be investing in a lot of things put together really carefully and not reacting too much to the specifics. So to me, the message is We within Edelman Financial Engines are constantly monitoring these things and asking ourselves carefully, when do they change our long-term assumptions? We're also constantly telling ourselves and trying to remind our clients that everything that we've learned and seen so far over the last many decades is that we're better off keeping that really diversified, steady portfolio and not falling prey to the excitement in the news.
Well, Katie, thank you for really empowering all of us, all our listeners, me, anyone who is interested in this topic, for focusing on what matters most, which is what's in our control. Really appreciate you being here with us. And just to all our listeners, we'll have more Money on Your Mind from Edelman Financial Engines for you next week. So hope you can listen in on Spotify, Apple Podcasts, or YouTube. And don't forget to leave us a review. Thanks again for listening. I'm Michael Liersch. This is Money on Your Mind. Take care of yourselves.